It's the year 2008. Markets around the world are in free fall. Entire economies teeter on the edge of collapse. Millions of people lose their jobs, homes, and savings almost overnight. But how did the global financial system come so close to destruction? This is the story of the 2008 financial crisis, how it unfolded, why it mattered, and how it reshaped the global economy. To understand the financial crisis, we need to go back to the early 2000s, a time of booming housing markets and seemingly endless prosperity. Banks, eager to capitalize on the housing boom, began offering subprime mortgages. Now, what are subprime mortgages? These are loans given to borrowers with less than perfect credit histories, people who might not have steady incomes or reliable financial records. In other words, giving loans to people who, under normal circumstances, wouldn't qualify. It's like handing a high-stakes poker player money and hoping they don't lose it all. These risky loans were bundled together into what are called mortgage-backed securities, or MBS. Imagine taking a pile of risky loans, wrapping them up into one shiny package, and then selling them to investors as if they were the safest bet in town. It's a little like taking questionable leftovers from your fridge, turning them into a casserole, and telling your guests it's gourmet. But things didn't stop there. Financial institutions also started dealing with collateralized debt obligations, or CDOs. These were bundles of different types of debt, like mortgages and credit card loans packaged together. CDOs were giving ratings to indicate their safety, but here's the catch. Many of them were rated AAA, the highest rating, even though they were filled with risky subprime mortgages. Imagine giving a 5-star rating to a car that might break down before it leaves the lot. And then there were credit default swaps, or CDS, which were essentially insurance policies on these risky investments. If the investments failed, the CDS would pay out. But as you can imagine, these financial instruments were so complicated they made calculus look like a board game. Even the people selling them didn't fully understand how they worked, or how dangerous they were. So, by 2007, the cracks in the system were impossible to ignore. The housing market, which had been growing steadily for years, began to stagnate and then decline. Home prices dropped and millions of homeowners found themselves underwater. Being underwater, by the way, means they owed more on their mortgages than their homes were worth. This was a huge problem, because those mortgage-backed securities and CDOs we talked about, their value depended on people paying their mortgages. Once people stopped paying, imagine Forrest Gump giving up on running entirely. The values of the securities tanked. The banks and investors holding them realized they had billions of dollars in assets that were now essentially worthless. Because of that, panic spread like wildfire. Financial institutions couldn't trust one another because nobody knew who was holding toxic assets. And let's not forget the role of leverage. Many banks had borrowed heavily to invest in these risky securities. When their value collapsed, the losses were magnified, leaving banks in dire straits. The crisis came to a head in September 2008 when one of those banks, Lehman Brothers, one of the oldest and most prestigious investment banks, declared bankruptcy. This was the largest bankruptcy in US history, and it sent shockwaves through the financial system. The collapse of Lehman wasn't just about one company failing. It was a symbol that the entire financial system was in jeopardy. Now, Lehman Brothers went from Wall Street royalty to an economics class lesson faster than you can say reckless risk-taking. To stabilize the system, the US government introduced the Troubled Asset Relief Program, or TARP, which pumped billions of dollars into failing banks to keep them afloat. Central banks around the world slashed interest rates to nearly zero, making borrowing cheaper to encourage economic activity. Emergency loans were handed out like candy at the parade. You can think of TARP as punishment from parents to children, saying, "We are not mad, we're just disappointed. Now here's a big pile of money, try not to mess up again." And while governments worked to save the financial system, the human cost of the crisis was staggering. Over 8 million jobs were lost in the United States alone, and more than 10 million families lost their homes to foreclosure. Retirement accounts were wiped out, forcing many people to delay their plans or even come out of retirement to make ends meet. Communities were devastated. The crisis hit low-income and minority communities particularly hard, exacerbating existing inequalities. Meanwhile, in developing countries, the slowdown in global trade led to recessions and increased poverty. The effects were felt everywhere. For those people, as you can imagine, it was hard to focus on Wall Street's problems when you're deciding whether to pay the rent or buy groceries. But Wall Street gets a bailout, while Main Street gets a reality check. In the aftermath, governments enacted sweeping reforms to prevent another disaster. In the US, the Dodd-Frank Act introduced tighter regulations on banks aimed at reducing risk and preventing any one institution from becoming too big to fail. Globally, the Basel III standards required banks to hold more capital in reserve, making them less vulnerable to sudden shocks. But did it work? While these reforms addressed some issues, many argue that the financial system remains fragile. The complexity and interconnectedness of global finance still pose significant risks, and the debate over regulation versus free markets continues. The 2008 financial crisis was a wake-up call, a stark reminder of the dangers of unchecked greed, poor regulation, and the overconfidence of an industry that thought it could never lose. It reshaped the financial landscape and changed millions of lives. The question is, have we truly learned our lessons? Let's hope so, because if history repeats itself, we need more than just TARP. We need divine intervention. Thank you guys so much for watching to the end. I hope you enjoyed, and if you did, it would be an enormous help to the channel if you could subscribe or like the video. And if you have any questions, just leave them in the comments. I'll try to answer. Thanks. See you in the next one.